Hello and welcome to the post-Fed webcast as we talk about trading growth and value. And obviously, some people have been trading here today post the Fed. Okay, probably monitoring some of these target areas and some of these indexes, sectors, and stocks. Somebody was trading. We'll talk about that here in just a moment. And also, we'll just give a quick synopsis of what happened with the Fed. Now, we also have Brent Morris in the chat and myself, James Boyd. I normally teach this class and on a weekly basis at this time. This is live and also being recorded. I'll share that playlist with you just momentarily. Let's go ahead and hop right in. Now, remember with what we discuss, it's provided for informational, general informational purposes only, not considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. You get to decide, okay? Schwab does not recommend the use of technical analysis as a sole means of research. That's why we have this class where we talk about fundamentals and technicals. We will use the Paper Money software application known as the desktop. With dividend stocks, they may reduce or stop paying dividends. They could also increase it as well, okay? And also remember when we talk about examples, all investing involves risk and past performance is no guarantee of future results. That trend could stop. And today, what we really want to focus on, we are on lesson week 5 of 8. And the last 2 weeks, we spent time talking about the value sample plans. And I want to kind of be just kind of straightforward here. Without really a plan, it's very doubtful that someone's going to have a lot of confidence. It has to be something that's written down. I don't care if you hand wrote it, you typed it up, something that you could adhere to and practice. And you want to learn how to evolve over time and kind of adapt to different market conditions and also things that you're learning. Now, today, our focus, we want to talk about income statements, okay? So just like in your personal life, you have income and expenses, and you have a profit at the end of the month. Hopefully you do, or a loss, right? Well, think of the income statements as the financial report card, okay, for the business. And that financial report card, good or bad, equals over time to you add to the balance sheet in terms of assets or equity, or it adds to the subtraction of equity or more liabilities, okay? And so these 2 weeks, we're going to really kind of look at the business itself and make sure that we're really picking some companies that really have some underlying strength to it, okay? And we want to make sure that they're profitable. Now, when we talk about profitability, that would actually be looking at growth. It would also be looking at value. When we talk about profitability, that is also understanding that if we can find some more profitable companies that grow faster, have higher earnings per share, that also reflects back into something that might have a higher intrinsic value. It may be a trend. So what we talk about today for sure and next week goes back to what we actually talked about the previous couple weeks. Okay, so first off, let's take a quick look at, just real quick, let's start with, you know what, why not? Okay, why not? Let's start with the Russell, okay? So first off, I did not draw these lines 5 minutes before we got in this class. No, okay? So we kind of talked about the Russell, okay? And I'll give you a quick synopsis of what the Fed's Jerome Powell did. They cut 50 basis points. The first time that we've actually had rate cuts. So when I say 50 basis points, just saying half of 1%. Okay, now you got to remember, you got to put that with a little asterisk. They raised it up 500 basis points or 5%. Today they cut 50 basis points, or in other words, 0.5%. So it wasn't like huge, but it was a start, okay? Now, we know that these smaller cap companies, these smaller businesses have been hurt, among other people, from those rate hikes. Today, we actually saw some pretty good follow through. You see that intraday, someone was watching where the resistance was, and some people took profit. Now, if you actually name 2 days, when do you tend to see the most volatility in the market with what economic data or announcements? Number one would be the Fed rate decision, not a surprise. And the other one would be the jobs numbers on the first Friday of every month. Okay, it's been the same thing for all I can remember in the last 25 years. Same two things. Fed rate decision, what's your expectation? Price volatility, okay? Traders are really going to be watching those levels. We see that here today. Now, the one thing to kind of take with a grain of salt here is if these traders got out and the market starts going back up tomorrow, Might those traders just hop right back in? Well, they could, right? They're just trading what the market gave them. A positive, better than expected announcement, traded to a resistance level. Their goal is to be right and sell at a target area. They did. Now, again, that doesn't mean they can't get back in the very next day or the next day after that. So when we actually take a look at the Russell, that still looks quite strong. And if we actually go back and really look at this, a series of higher lows over time. I think if there is a winner, okay, from today's announcements of cutting 50 basis points, they have an expectation of 2 more rate cuts in 24, 100 basis points in 25, 1%, and another 50 basis points in 26. Now, that's their estimate. They don't know for sure, but they're trying to give market participants an idea of where the rate path could go. Why do they do that? Well, because if people are going to make financial decisions, they want to have an idea of what the Fed is thinking with interest rates so people make an investment, okay? So I think if there's a biggest winner, we'd probably say it's the Russell. Dow Jones itself also did go up to an intraday high here today, 419.82, closed slightly down, not massively bearish, but we actually closed back down near this prior high. So a lot of expectation coming in today, and some people profit took on the announcement, okay? Now, again, that doesn't mean it's bearish. They're not going to get back in tomorrow. Some people use today's price rally to sell into that expectation, okay? So still looking quite bullish there. The SPX, we did also make a brand new intraday high right there. Have that ascending triangle. Many of you talked about that here today as I was doing chat for Cameron. You still look at that, still an ascending triangle, okay? When we also take a look at, let's say, the NASDAQ, just briefly on that, that still looks like a big, old, symmetrical triangle and or pennant, okay? Now, when we actually look at this, kind of a squeeze. If we actually get these higher lows underneath and that large candle right there going into the maybe apex of that triangle, just increasing the likelihood that we could potentially break to the upside. So keep an eye on that, okay? Last one I'll just make mention of just really quick is looking at the U.S. dollar. We did see the U.S. dollar here today as they cut the interest rates. Intraday did go down to a fresh new low, okay? So euro, pound, Swiss franc, among other currencies, increasing as the U.S. dollar fell, okay? So what happens with our rates, okay, can affect what happens with the U.S. dollar. And the one thing I do want to bring up, just because we are invested in it, is we did see gold did intraday hit up to over 2,600 and closed at 2,580. Oh, that's so sad when it gives back some off the top. Okay, but who was watching, right? I know you were. That's why I pulled it up. Now, let's kind of talk about some just sectors briefly, okay? When we talk about sectors, discretionaries did make a brand new high. You did see industrials make a brand new high as well. Also, along with that, you did see basic materials also not a brand new high, but kind of near that prior level as well. I want us to also keep an eye on financials. We've been talking about that cross that's been setting up, and those are some of the sectors that kind of stood out here, okay? Now, so the biggest actually takeaway, let's just kind of sum this up. I want us to keep an eye on the Russell. Obviously, the Dow and the S&P have been very strong. If we're talking about a potential breakout alert, it's probably going to be on the NASDAQ, okay? Volatility holding right around 17. Gold still looking quite strong. Would have liked to see that not fade back as much, but it did. And by the way, if they're planning on cutting rates that aggressively over time, kind of makes you really wonder, are they really going to fight inflation when they cut down that much? That we'll have to see how that works, okay? Now, what I want to do is I want to pivot and I want to talk about, let's say, looking at some income statements. I'm going to show you in 2 different ways we can find it. So number one, I'm going to bring up a stock that kind of came across the radar here today that was actually quite strong, okay? We've been talking and joking a little bit about Apple all week. Let's kind of go to this as a kind of stepping stone, okay? So if you take a look at Apple, I want to kind of now go to where it says analyze, and I want to now go to where it says fundamentals, okay? Now, what I want to do is I want to bring something up so we're just all on the same page. Some of you might say, James, I'm not an accountant. Some people think I am. I'm not a CPA, but I do a lot of accounting, Okay. I'll just say that. But I'm not a professional. Okay. Now, the biggest thing when we talk about an income statement is we're going to say the word sales or the sales/revenue. We're saying the same thing. The cost of item, that's also known as cost of goods sold. And that gets us to what's called gross profit. Okay. Now, here's the deal. I just want to kind of give you a scope of the numbers that we're going to look at. Okay. So we're interested in this number for sure. Okay. Now that number could be expressed in a dollar amount. Okay. Or a percent. Okay. Now, in a business, we know that it's not just selling something and paying for something. Okay. You got people. Let's just kind of say people. You got buildings. Okay. You also got, for example, with that, what else are we missing? People, buildings, what else do we have? I'm going to just call it miscellaneous expenses. Could be marketing, advertising, and so on. And then we get down to what's called operating profit. Okay. So when we go below gross profit, we're subtracting out salaries of workers, cost of the building, miscellaneous expenses, which could be many. And now we're going to get down to what's called operating profit. Okay. That could be a dollar amount, obviously, and a percent. Now, this right here, we would just call this EBIT. Okay. And you'll see that term a lot. EBIT. Earnings before interest and tax. Now, we include that interest. So if the business is paying, let's say, bond, like debt, if they have debt and they're paying interest, they could subtract the interest off the earnings, and you know the tax man's coming. Okay, could be her too. Tax, okay, and now you get down to net profit. Again, that's going to be a dollar, and that's going to be a percent. Okay. Now, this right here, they just call it good old EAT, earnings after tax. Okay. So this is really kind of the overview of really what we're getting to. So when we look at these numbers on the Thinkorswim platform, we're going to want to look at and see what's the percentages and dollar amounts. What are the operating profit? What's the net profit? And we want to kind of compare. Okay. So what are we going to do with it? We're going to compare the business numbers to itself over time to see fundamental trends. Now, what else are we going to do with it? We're going to compare the stock to its competitors. Okay? We're going to do both. Okay? So the first example that we're going to take a peek at is we're going to look at Apple, and where do we see that information? I'm going to show you both places, okay? So if you're on the Thinkorswim platform, we're going to go to Analyze. We're going to go to right to where it says Fundamentals. Now, if we go down to this and we scroll down, you're now going to see some information. It's going to give us a section by the numbers, okay? Now, if you take a look at this, what you're now going to notice is information about share values, okay? So kind of think back to, like, say, week one, okay? The area that we want to now look at is profitability. Okay, now think back to what we've been doing the last couple of weeks. We're looking for companies that have value, something that actually is creating some profitability and making money. Okay, but also the other thing is maybe the growth is higher than the economy or the industry group / sector, but also just getting stronger compared to what it's been doing, but also to its competitors. Where can we see that? Well, you're going to see this in the column headings. Now, when we take a look at this, if you see where it says current LTM, that just stands for last 12 months. YOY percent is year over year percent. 5-year trend kind of gives us a little bar graph where we can see that 19, 20, 21, 22, 23. So it's annualized. Okay. Now let's kind of start just real quick with what we just talked about, gross profit margin. So if we actually said the last 12 months, 45%, not bad. So we want to kind of take a look and see the trends over time, and that little histogram bar has been going up. Not a bad trend to look for, okay? Now they have 37, 38, 41, 43, 44. Now, You might be saying, well, James, this information was in 23. Where could we see the quarterly information? We could click right there. And that's where you could also really kind of see, is it a kind of a cyclical business or is it kind of more steady? Okay, so think of like a cyclical kind of a business that might kind of be like a Christmas business, fertilizer business, H&R Block, you're doing taxes in April, and so on and so on, okay? Where the sales are not consistent all year round, pretty much. They might have a quarter or two that is way higher than the other 2 quarters. That should make sense. Now, operating profit margin, down a little bit, okay, not horrible, but when you take a look at the last, let's say on Apple, 25% still, and that's almost the second highest of where it's been in the last 5 years. Now, when we talk about net profit margin, 26%, okay? And if you look at that number, it's 25%. It's the second highest of where it's really been the last 5 years. Now, you might think of this and say, well, why would someone actually do this? This seems to take time. Well, I want you to imagine you work at a bank. Someone comes in and says, I'd like to borrow $25,000. Man, they're wearing a nice watch. They got like nice clothes. They're driving a BMW 5 Series, and you just say, look, heck with protocol, I'm just going to lend you and give you the check for $25,000. What you just did there was technical analysis. You went on what it looked like. You never did any due diligence at all, and you were a technician. A fundamentalist is actually trying to really see what are the trends of the business, okay? So if we looked at Apple, what would you say about the business? It's growing actually overall. We could include share values to kind of say, hey, what's the earnings per share like? And if we look at the earnings per share like, it's actually increased over time. Okay. If we said what's the dividends per share, it's also increased over time. So not only has the business made more money, earnings per share wise, but it's also sharing that back in the form of a dividend. Okay. Now, the example I gave at 25,000, you might say, well, that's a stupid analogy, and that never happened. That's not true. Back in 2001, I worked at a bank. The banker there gave someone $250,000 based upon what they look like, the watch, the pants on the shirt, the car, and where they lived. Needless to say, the banker was fired 10 minutes after the guy left. Okay? So don't tell me it doesn't happen. It happened right there, Sandy, Utah. Okay? So what I'm telling you is a technician is just going to look at pretty charts. But someone who is an actual investor and investing their own $15,000 or $25,000, etc., they want to know, what am I actually buying? Am I buying something that just has a pretty chart, or is there an actual operating business here that might continue potentially into the future? Okay? Now, needless to say, when that guy was fired, the guy looked at me and goes, well, the guy seemed like he had money. I was like, wasn't a whole lot to say. Okay, wasn't a whole lot to say. Now, what I want to do. So first off, I just brought up Apple as an example. Okay, I want to kind of look at some different charts, and then we're going to trade them. I'm going to also bring up one that we are going to trade, and it's on Monster beverages. Now, if I said to you Monster energy drinks like Rockstar, things like that, you probably know that. Now, Coca-Cola is the one who bottles them. Historically, could be doing that still now. We're going to go to Analyze and then Fundamentals. Now, when we scroll down, I'm going to show you some different ones on purpose, okay? So when we look at gross profit margin, 53, okay? Now, what you're going to notice is over time, they were doing better in 19, 20, slipped in 21, slipped again in 22. Now, what do you think would probably happen on the chart at that time? Okay? Well, you could be getting into a situation where maybe that stock also is, the technicals are matching what the fundamentals are doing. When you get down to net profit margin, you see the same thing, slip down in 22. And in 23, it was still lower over the 5-year average, okay? So if we go back and say, what's that trend really been doing? In the last year or so, it's kind of been down as those margins have been affected. Now, let's kind of talk about when we bring up like the CEO, CFO of the business, okay? if the management of the business realizes they have some problems, they're paid to fix the problems. Okay. So they could actually try to adjust cost, the cost of the item they're selling, make it more productive and efficient. They could try to have less workers, try to have less building, try to have less miscellaneous costs, and so on and so on and so on to try to be more profitable. If they can be more profitable, they could have more earnings per share, have dividends potentially, and that stock price might go up as shareholders see, hey, the leadership of the business is listening to shareholders and actually making the business more profitable. Okay? And that's where it comes back to the financial statements. Now, what I'm going to do on this example, if we were to look at this and say, okay, what do we see on this chart? This is kind of one of those charts where if I look at it, draw it like that, or if I draw it like that, I don't know if it's really going to make a difference, okay? On Monster Energy right here, what we see is like a big long-term diagonal breakout, but at the same time, we're also really seeing a horizontal breakout, okay? Now, what I'm going to do for the sake is when I take a look at this, we're going to buy Monster Energy thinking that maybe they might kind of be in the trough of some of their lower economic numbers. And you see this in recessions all the time, or businesses that are struggling, okay? If investors really think the business is starting to change, like Starbucks as of lately, they buy when the numbers have been weaker. That's what a fundamentalist does. A technician, they try to buy when the price is depressed, near support, okay? Same idea. Now, what I'm going to do is I'm going to right-click on the chart. We're going to go buy custom. We're going to go with OCO bracket. Now, if I went to perhaps maybe like a target, the first target might be, let's say, 55-ish. And that second target area, which we're going to try to go for, is right about 59-ish, okay? Now, what I'm going to do is I'm going to put a target right about $59, okay? Now, what I'm also going to do is I'm going to go to the second area, which is down below, which is the stop, okay? And what I'm going to do is I'm going to set a stop like 2% below 50. By the way, we could almost go 3%, okay? So if I take 50.03 less 2 to 3%, I'll go 3, okay? 48.52, okay? So remember we said there's two reasons why we looked at this, okay? Number one reason was that 48.52, okay? We want to see the trend of the numbers compared to itself. What was the second reason that Brent just typed in? We want to see this company's percentages compared to who? Its competitors. Let's go take a quick look before we send this order, okay? So I'm going to do a GTC. Now, what I'm going to do in this case is, okay, we bring this up, and what I'm going to do is I'm going to bring up Schwab.com, and we're going to see where can we see those numbers on a table, okay? So let me just, I'm going to log in, and then what I'm going to do is I'm going to bring it up. Now, once we log in, we're now going to see that information. I'm going to go to the very top right, click on the search field, type in, now that I'm already in Schwab.com, I'm just now going to type in the ticker symbol, MNST. When we do that, you're now going to see that we'll just click on the symbol Monster Energy Beverage. Okay, now this is not a new page. We've been working on this the last couple of weeks. We're going to scroll down. So there's two places we can get this information. Showed you the first place, but now our goal is I want to go look and see Monster compared to its peers. Who are its peers? Well, peers and ratio comparison. Monster, Dr. Pepper, Constellation Brand, Diageo, and some others. Now, if I only looked at this, we only get net profit margin. What I'm going to do is say, hit me with this show more, okay? Now, remember, whose money is it? It's your money. If it's your money, would you actually want to look at it? So let me ask you a question. Why do people spend 30 minutes doing due diligence on a vacuum cleaner that's eventually going to go to the landfill, but then when it comes to like investing and picking stocks, 30 minutes is too long if it even took that long? It's kind of awkward, isn't it? So sometimes as people, we don't necessarily make rational sense, do we? We really don't, do we? Okay. Now, what I'm going to do is I'm going to kind of scroll down. And what I'm looking for is we're going to scroll down to that area where we actually take a look at the area of profitability, just like we saw on the Thinkorswim platform. There it is, profitability. So let's kind of highlight some of the differences here. We can see the companies. And I want to know, are we buying kind of one of the leaders? Are we kind of buying something that's leading the pack? Are we buying something mid-tier? Are we kind of buying something, let's say in this case, is underperforming? Well, if we look at gross profit margin, 53, it's not the highest. We'd have to kind of give this a ranking of its number 3. Okay? Number 3. What's number 1? Diageo is pretty strong. Second one is Dr. Pepper. Now, operating profit margin. Well, you got to go Constellation, number 2, Diageo, and number 3, if we gave that third place trophy, would be operating, would actually be Monster. Now, if you also take a look at this and kind of say, okay, what are we missing? Well, we don't have net profit margin. Net profit would be Constellation again. Number 2 would be Monster, and number 3 would be Diageo if we're just looking at the percentages. Now, when I look at this, if you're looking at Monster Energy first, you might say, wow. One that I might want to go also take a look at is STZ, and I also might go look at Diageo. There's nothing wrong with that, okay? Now, if the thing is, if we're going to pick a stock that might be that second or third, okay, we might want to also go look and see what are their growth rates forecasted for the next year, okay? So if I go take a look at this and say, hey, what is that growth rate of these businesses? The earnings per share growth rate, 7% for Monster, 13% for the next 3 to 5 years, okay? Where's this one? It's lower on both. Higher. So the one that kind of stands out to me to just take a quick peek at is really STZ as well, which has some pretty strong growth in the next, let's say, 2 periods of 1 year and 3 to 5. Let's just kind of just take a quick peek at that as we're talking about it and kind of take a look at, is the chart showing that? Kind of sideways, okay, to say the least. Is it breaking out maybe as strong as Monster is? Can't really say that, okay? And it is about 5 times as pricey, okay? So we're going to choose the Monster Energy here. So we have a target at 59, stop at 48.52, GTC, confirm and send, okay? Now what you see in here, remember how the stop works, okay? The stop or the target is not valid until the stock is purchased. If the stock is purchased, the stock will be sold if it goes at or below that price. That's the trigger. That doesn't mean it's going to sell there. You have to wait and see what it fills at. Okay? Now, what I want to do is, and we'll send that order. I want to also go back to one that we've been talking, and I want to kind of show you some stocks that kind of came across the radar here today, okay? Now, one that we don't talk about a whole lot that came across the radar is Stanley Black & Decker, okay? And remember, with industrials hitting some brand new highs here today, the sector, you're kind of wondering like, well, what's in the sector, okay? Now, we're going to look at this. I have not seen the fundamentals. I just saw kind of the price performance. We kind of get a recent low, which might have been, let's say, the old high, okay? Interesting. When we go back and look at this 3-year weekly chart, pull it up, big, long basing pattern. Now, when I looked at this chart on the 1 year and also the 3-year chart, I want us to kind of think what the fundamentals might look like. What do you think the fundamentals look like, given that chart? Well, if I go to analyze and I pull up this and I pull it up, okay, let's kind of take a look at what we see, okay? So notice what we see. And I'm doing this on purpose. I speculated this was going to be the case. Now I'm just confirming, okay? So we saw that the chart over the last 1 to 2 year periods, not the greatest, okay? Gross profit margin, the lowest we've seen of the 3 examples now that we've looked at. Operating profit margin, what do you notice? It's negative, okay? So here's the deal. if you want the company to have positive intrinsic value, it's going to be hard to see what the intrinsic value is if they don't even have any positive earnings per share. Okay? That's going to be tough. And when you go down and look at, let's say, the net profit margin, okay, it's also negative. And when you look really over time, what you're going to see in this case is struggle, struggle, struggle bus. Now, if the company struggles to make any money, are they going to really pay any dividend? They might not. So number one is a business that's struggling, which then leads to maybe the chart not trending, which also leads to, let's say, a stock where people don't know what the intrinsic value is, and also where you can get a situation where they're not paying any dividends because the business is less profitable. So then the investor sits in, this is what we call buy and mold. Buy and mold is, hey, it's a good company, I like their tools, but the stock, the company is not really, well, it's not making any money, and the stock goes down, okay? Now, so Black & Decker, the reason I'd say we're going to keep an eye on this, this is something that might be trying to turn around. If the business is really going to make it, it goes back to, can the leadership of the business change what's happening? The cost, the sales, and also the operating. So I want us to keep an eye on Stanley Black & Decker. That was one that a long time ago was pretty strong. Another one I'm just going to speak to just quickly, okay? One we don't normally talk about, Revvity. Kind of interesting one that kind of has something where it's like a broken out, made some higher lows. Keep an eye on that one too, okay? The other one that came across that also hit a brand new high here today, which we will take a look at this one, okay, is EXR, okay? And the other one that I want us to keep an eye on is Carrier. Now you might say, what in the world is this? Well, if you weren't sweating this summer, you might have had a Carrier AC unit on the side of your house. Now, if you've had an AC replaced lately, you know it wasn't as cheap as it was 10 years ago, okay? I think the cost of those machines were going up 8 to 10% a year, even though they were the same box as before, okay? Okay, I'm not a hater. I'm just saying that's what it felt like. Now, I want to go back to this one for just a second, okay? Now, when you look at EXR, we're going to look on both now, the Thinkorswim platform, and we're going to look at the Schwab.com. The Schwab.com allows us to compare this company compared to its peers, okay? If I go to analyze and say fundamentals, that's just going to take a look at the trend analysis compared to itself. So first off, if you take a look at this, operating profit margin, the last 12 months, gross, 75%. Now, how's that normal? How's that so high? Well, this is a REIT, a real estate investment trust. Beware what those risks are, right? They tend to have higher gross profit margins. And what you're now going to notice is, look, I'm doing this on purpose. Look at the stability there. Gross profit margin staying, it's less volatile, right? So this kind of goes down to some investors like to pick companies where its gross profit margins are not all over the place. This is an example of that, okay? Number two, when we look down at the operating profit margin, it's like the same. Now, there's some variation there, okay? But it's still been pretty steady over the last 5 years. And when you look at the net profit margin, what you're going to notice is it's kind of pretty steady, okay? Now, when you look at the year of 2020 and 2021, you're going to see that there was a spike, okay, in the operating in those years. Now, what happened in those years? What did we see that happened? Okay, so this is where you kind of want to pay attention to kind of what's going on in the world, okay? Well, back then you had COVID and the Fed dumped the interest rates. You have a business that is doing storage units, okay? So if the Federal Reserve, dumps the interest rates, businesses, financial companies, etc., can borrow money for cheaper. Wait, if you borrow money for cheaper, what should those margins do? Well, they could go up, right? If the margins go up, What could the earnings per share do? Now that you asked, let's go take a quick peeky. Well, it topped out at 619. Topped out in 22. And then as interest rates ramped back up, earnings per share fell. Now, if those earnings per share over time go up, the dividend per share can also rise as well. So what I need you to understand is this stuff is not just an isolation to itself. One affects the other. As we get higher earnings per share, you're going to notice those dividend payments, okay? Dividends per share also increase. Okay, now what's your two favorite words? Okay, well, I'd say what's your favorite word? You'd probably say income. Okay, so why do people buy REITs? Why do people buy staples? Why do people buy extra utility stocks? They're trying to find businesses where the margins are more stable. Even with that, can you get wide ranges in interest rates that cause the markets to vacillate greatly? Yeah, you can. But what we saw with COVID, obviously, and the rate changes in a very brief period of time, we had never seen probably in the last 100 years of the market. Okay, so pretty abnormal. But I want to go back to this, and what we're going to do is we're going to look at EXR. We're going to buy that stock on that high. Now, the question now becomes, is this really more a growth stock or a value stock? What would you say to that? Growth or value? I mean, if you looked at the fundamentals, it's showing growth, okay? But could it also have a component of, say, value to it? But we could also kind of throw this out and say, my gosh, but there's also the income perspective of this. Could it be a GVI? A little growth scenario in the fundamental numbers and technical trend. Could have maybe some potential value to it as well, but also some income component. Could you have all three at the same time? Let's say you could, okay? Now, what I'm going to do is I'm going to go back to this. Now, by the way, I want you to think about this, okay? Have you ever driven by a storage unit and said, holy Toledo, people sure have a lot of stuff? Okay. Now, if you open up most people's garages, it's even lucky they could even close a lot of times, okay? And then on top of that, they add a little storage unit because they just need a couple more things. So these have been pretty hot, and just for personal use, but also business as well. Boat storage, okay, RV, and so on, okay? Now, what I'm going to do is now here's the deal. Are we going to put a target on this? I am not going to put a target on this. Some stocks might not have a target, okay? You can't look at the technical analysis on everything and say, oh, I'm going to put this as a target. So what we're going to do is we're going to kind of try to use stops to adjust, okay, the exit, okay? Now, if I kind of said, where was the breakout level, okay? The breakout level was right around 178.46, okay? Less 2%, and it's going to be at 174.89, okay? 174.89. Now, here's what we got to be careful with. In the after hours, if we just right click on the ask price is inflated, showing that the market is closed. We want to make sure that the price we type in here matches with where the closing price was at 4 p.m. Eastern. So I'm going to type in 181.65. Okay. Now, when I did that, it's taken my stop, 174.89. Okay. There we go. Now we're good. Dated GTC. Okay. So first thing what I want you to do is a takeaway. Okay. I want to go back to something just for quick. I want you to look at current holdings. Okay. Your current positions. Do they have a fundamental positive trend? Do they? Are you holding some dogs? Oof. Okay. Jack just looked at me. What I did. Okay. If you could see his face right now. I want you to look at your current holdings. Do they have a fundamental trend? Now, if you have bought some companies and you say, James, I'm like that analogy story that you gave. I was trying to get in. I I bought some companies, the investor says, and I didn't really look at the fundamentals. I just looked at pretty charts. I fell for the pretty wristwatch, looks nice, drives a nice car. The technicals were great, but I truthfully did not really look and see, is there a real business here? Okay, and I lent the money, which was your capital, to get in. I hope it goes up. But that's kind of like a lemming, where you just follow the next person in front of you, hoping that you don't go over the cliff. Okay, now, the second, what I want you to do is I want you to compare, okay, your stocks to its peers on Schwab.com. Now, I ain't done. I want to go, so first off, you need to do this. Now, again, whose money is it? Whose money is it? Okay, so here's the deal. If you don't care to do this, you might not really care. Okay, what you're trying to do is you're trying to put yourself in positions where those companies could appreciate in value, price per share wise, but also business value. If that also is the case and they start to make more, they could share money back in the form of a dividend and might be some potential income. So you should care, okay? Now, the other thing is, hey, have you ever owned a stock where it seemed like, geez, I'm always buying the one that's not as strong, or I'm in the area, but I didn't have that one that really went up. So I want you to kind of have a scope of just looking at not at the company that you see, but looking at the competitors. Now, I want to bring up one more to close here, which we've talked about yesterday. We'll confirm and send that order. Note that position. Now, remember how the stop works. The stop is not valid until the stock is entered. The stock goes down to that price or less. It's then triggered to sell, but we don't know what it sells for until it fills. Okay? Now, what I want to do here is I want to bring up one that we've talked about a little bit, which will be a nice little compare and contrast. Now, there's been a stock, not like Stanley Black & Decker, where it went down for a long, long time. We see that First Solar went down a little bit, right? Came back down, based itself. Today went halfway up inside the channel. Not like anybody was paying attention, but let's say they were, okay? Now, in one day, we went halfway in the channel intraday. Now, let's go back to the analyze. We're going to look at both real quick, 2 minutes or less. When we look at First Solar, okay, gross profit margin, the current last 12 months, 39%. What's the trend of this been over time? Man, big time struggle in 22. 23, they were at 39. Remember, if you want to see quarterly, just click on quarterly. When we look at, let's say, operating, 25. Struggle. Better, big time struggle, big time change. So 23 was kind of a pivoting year. And you look at net profit, struggle, same thing, struggle in 22, better. Okay? Now, obviously, you'd want to see those trends in quarterly improve as well. This is where we can see those net profit margins. They're actually at the highest they've really been over the last 6 quarters. Okay? 1, 2, 3, 4, 5, I should say. Okay? 5 quarters. So now you're going to see it's ramped up even to 34. Now, if I pulled up, let's say, on Schwab.com and said, hey, what type of trends do we see compared to its peers? Let's pull it up. Okay, First Solar. Are we kind of buying the weaker one, or are we kind of buying one that has a little bit more strength? Now, let me kind of back off for just a second, pull this up, make sure it kind of reloads properly. There we go, just setting back up. We're going to go down to its peers, okay? Now, when we pull this up, I just want to see the comparison, okay? Let's go back. And sorry about that screen there. There it is. Let me click on show more now. Okay. There it goes. Okay, now loaded. Good. Okay. So I'm going to scroll back down to profitability. Let's just speak to it. Okay. Gross 45. One that's stronger is TER. Operating 34. It's the highest. Net profit margin. It's the strongest. Now, in every example I do in my webcast, I don't always show you this. But again, a good investor will at least have an idea. Are they buying one of the top performers? And the goal that we like to set for ourselves, if we're going to buy any stock in the space, we'd like it to be in probably the top 3 in the whole industry group. Now, if you ever looked at any reports, okay, they broadened this out to 10 stocks. So you could really start to get the idea of this company compared to its peers. And you better believe that actually real investors look at that stuff, okay? Because if they're going to make decisions of buying 50 million, 25, 100, half billion, whatever it is, they're going to look at these numbers and try to get an idea, can that leadership continue? Now, I'm out of my time here today. With what we discussed, I gave you a homework assignment, okay? I want you to look at your current holdings and do they have a fundamental positive trend? Do they? I want you to check, just like we did here. Second, I want you to compare those stocks to its peers. And you might say, I have some stronger ones, or I want to sell what I have and try to find ones that are really stronger. Now, next week, we'll take a look at balance sheets, kind of looking at the business of assets, well, kind of looking at assets and liabilities and equity. We'll talk about why that is so important and how it affects the value of the business. Now, I'm out of my time here. Stay tuned for the workshop coming up next, okay? And remember, with what we discussed, it was done for example, illustrative purposes only. I will share the playlist in the chat, so that way you can see that playlist as well. I'll post it just momentarily. I'll be back on Futures tomorrow morning, and I will teach Trading the Trend tomorrow. Thank you, Brent, as well, for answering those questions in chat. This has been the class on trading growth and value. Thank you so much. Take care. Bye-bye.